What on earth has happened to Tesla stock recently, and also not even that recently, over the past year, over the past 2 years? Tesla has been getting absolutely crushed. So recently, since March the 31st, the stock is down 20%. And if we look at it from a bit of a longer term point of view, the stock used to sell for $407 a share. Right now it's $162. That is down 60% from its all-time highs. Can we please address what the heck has happened to Tesla stock? There's a couple of key reasons why the stock is down by so much. Let's get straight into them. If we take a cheeky look at the www.Buffett Investors website, we can see that net income, aka earnings, aka profit, all three of those are just three words meaning the same thing, profit has been struggling a bit recently. Okay, so this is Tesla's net income, aka profit. Let's just zoom in a bit. And as we can see, since 2022, the start of 2022, earnings have been struggling. They've kind of been hovering around the same amount, sometimes down, sometimes up a bit, sometimes up a bit, sometimes down. When it comes to Tesla, Tesla is a high growth stock. They are priced for growth, big growth. And right now, what we're seeing in 2022 and the start of 2023 is Tesla have struggled. And when they struggle to produce that profit that investors need, what happens to the price? The price goes down because it's doing the opposite of what investors want. Now, the question is, why are earnings down? Let's take a read. It says, underutilization of new factories, stressed margins, along with higher raw material, commodity, logistics, and warranty costs, and lower revenue from environmental credits, all contributing to the drop in earnings from last year. So what has been the key economic metric that everyone's been talking about recently? It's inflation. Okay, what does inflation mean? Inflation just means prices for things are getting higher and higher. And Tesla see this too with everything that they're buying, the raw materials, the metals. They have to pay a higher price. And this is eating into the margins, eating into the net income. So their costs have gotten higher, but what are they doing to their revenue? What are they doing to their own prices? Are they raising them along with inflation? No, they are not. Tesla has cut the price of its Model 3 by 11% this year. Prices of its Model Y have been lowered by 20%. So Elon Musk said, we've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. So Tesla have to pay higher costs to produce their car. And what are they doing to their price? They are actually lowering their price. So they are getting lower and lower margins. And this is why we are seeing less income. It's basic math, it's basic economics. Another reason why the stock is down by a lot is because of Musk's recent warning about the global economy. I don't know if you guys have seen this warning. Let's read it out. So Musk said he expected 12 months of stormy weather in the economy. He cautioned that every time that the Fed raises interest rates, that's the equivalent to an increase in the price of a car. He also said whenever there's uncertainty in the economy, people will generally postpone big new capital purchases like a new car. So yeah, if people are worried about the economy, they're worried about their money, they're not going to go and buy a really good, let's say luxurious car like a Tesla. They're going to be more worried. They'll say, okay, I'm going to hold off on my luxurious purchase. I'm going to keep my money because I'm worried about the economy. I need the money. I'm going to keep the money to be safe. As opposed to when there's a lot of money in the system, people aren't worried about money. They'll buy the Tesla. They want to look cool. They want to buy the new thing. So this is a big reason why, again, Tesla's stock price has gone down. Now, the third reason, we have to address the elephants in the room. Not the elephant in this room, the elephant in the room of Twitter. Twitter in the room of Twitter and the room of Tesla. What's been happening there? So CEO Elon Musk sold billions of dollars worth of his Tesla holdings in 2022 to finance a $44 billion buyout of the social media company where he is now also CEO. So Elon Musk himself sold Tesla stock. And whenever he sells Tesla stock, whenever the CEO sells a stock, it's not, investors don't like that. Let's just put that mildly. Even though, let's be honest, Elon Musk, he had a fair reason for selling. He was selling to buy Twitter because he wanted to save the social media world and he wanted free speech and all of that. Free speech. Just joking, I'm a big fan of free speech. But it doesn't matter the reason why. If a CEO sells his own stock, investors don't care too much. They don't like it. Another reason why the price is down. Also, you got to remember, Elon Musk is the chief guy over at Tesla. But now he's the CEO at Twitter as well. So he's spending a lot of time at Twitter. Even I remember watching an interview, he said he was sleeping on the couch at Twitter HQ. He's spending a lot of his time at Twitter now, a lot of his energy, his genius energy at Twitter, instead of working on Tesla.
When billionaire Elon Musk bought Twitter, some Tesla investors worried Musk was abandoning the electric vehicle maker to focus on the social media company.
So in Twitter,
what could possibly go wrong?
Since the deal's close in late October, Tesla shares have slipped.
Again, it's another ingredient that investors do not like. We have to talk about the increased capital expenditure as well for Tesla stock. According to a financial filing published in late January, Tesla expected to spend between $7 billion and $9 billion in 2024 and 2025, an increase in capital expenditures of about $1 billion in the next 2 years. So these expenses from Tesla, we can expect to go up in the upcoming year, in the upcoming 2 years. Now, of course, there's valid reasons for why they are spending more money. Nevertheless, it's not nice on the bottom line when you say that you're going to be spending more money. It's another reason why the stock is down. Fifth reason that we have to talk about is the increase in competition in the electric vehicle market and the fact that Tesla's market share actually has gone down recently, as much as many Tesla shareholders don't like to say or don't like to admit, it has gone down.
For years, Tesla has stood out as the leader in the electric vehicle space. And while its dominance continued in the third quarter of 2022, its market share slipped to 61%.
In the last year, we've seen an explosion of competing EV models for Tesla. And as that number continues to grow over the years, the concern is whether or not demand for Tesla vehicles will continue to stay as high as it has been in the past.
According to JD Power, there were 33 EV models available in the US at the end of 2021. But by the end of 2022, that number had jumped to 53 models.
I've said this many a times before, but one thing that investors hate, remember, if you're an investor, if you're a stockholder, if you buy a stock, you are a business owner. One thing that business owners hate is competition. Who would want competition? In an ideal world, we want no competition. And when more and more competition comes in the market that you're in, it makes it harder and harder and harder to make money, which is what a business owner looks for at the end of the day. Tesla have seen increased competition over these past recent years. So those are 5 key reasons why the stock is down by so much over the past year and a half. Now, one point that I did want to make is if you're a true bull, remember that a lot of Tesla investors are very, very emotional and they don't like it if you say certain things about the stock. But guys, if you're truly bullish on Tesla stock, you actually want the stock's price to go down by as much as possible, because then you can just buy it at a cheaper rate. The more and more that you hate on someone for criticizing your stock or bringing up certain points, that just tells me that you are insecure about the stock that you own. You don't truly know the true value of the stock. So a person who is truly secure in themselves and their investments, just like Warren Buffett is, actually want the stock's price to go down. Speaking of Warren Buffett, one of the key things that he does is he likes to separate price from the true intrinsic value of the stock. So that's what I want to look to do now is, what is Tesla's intrinsic value? Let's do a calculation. But before we get into my intrinsic value of Tesla, quick calculation on it. Let's take a look at Kathy Wood's
price target for our stock, and I think it's just hitting now for 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case. We think that the robo-taxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030, and is one of the most important investment opportunities of our lifetimes.
So a price target of $2,000, that would mean the current price goes up by more than 10 times the amount, which means the current market cap would be worth more than $5 trillion. What can I say? That is an extremely bullish estimation on Tesla's intrinsic value. The Kathy Wood is a notorious bull, and she can be quite extreme on her predictions, let's just say that. Essentially what she's saying is, well, her big thesis now is robo-taxis. She thinks the robo-taxi market will be worth $8 to $10 trillion. She thinks Tesla are going to dominate the robo-taxi market through their self-driving, thus take a big market share of the robo-taxi market. Thus, their market cap increases by 10x, 12x the amount. Okay, now I just want to get into my intrinsic value calculation, and we're doing this just based on their current free cash flow, what we currently can see. I'm going to do a 10-year forecast on the stock. Discount rate is 10%. I always want a 10% return. And I'm going to do a bull case, bear case, and normal case scenario. So there's a couple more ingredients that we need to determine. First, we need to make sure that we're dealing with an appropriate starting free cash flow amount. I feel that that is appropriate. That is even less than last year's free cash flow. So we're going to start off with 5.8 billion. Remember, what we're doing with intrinsic value is we're doing things the Warren Buffett way, where Warren Buffett says the value of a stock is the present value of its future cash flows. AKA, you can think of a stock as this money printing machine. Every year, it's going to give you this amount of money in terms of earnings, and you have to work out, how much am I willing to pay for this? So what we need to work out now is, what is those future cash flows each year gonna be? That's what I'm doing now. So now we need to work out, what is the future growth rates gonna be in cash flow? Let's look at what analysts expect. Analysts expect next year to be 12.6%, 38%, 20%, 1%, and then 18%. So for my bear case, I'm just going to say that Tesla struggle over the next 10 years. Let's say the economy constricts, the EV market becomes more competitive, and Tesla can only grow their free cash flow by 5% each year. And we'll say in 10 years time, we can sell Tesla for a multiple of 15. This is my bear case scenario. Let's calculate what that gives us. That currently gives us an intrinsic value of 100 billion, saying that which is 80% below the current price market cap of 500 billion. So that's assuming that we get these cash flows each year, that it grows by 5% each year from what the current cash flows are. We get in year 5, we get this cash flow, this cash flow, this cash flow, and in the 10th year, we sell the stock for a multiple of 15 times the amount. Does that make sense? So bear case scenario, if the earnings or the cash flow only grows by 5%, the stock is currently massively overpriced. The value is well below the price. Now let's change our assumptions for the normal case. Let's say in a normal case scenario, we kind of agree with what the analysts say, and we say on average they can grow by around 15% each year. Because they are able to grow by a higher growth rate, we'll say they can sell for a higher multiple of 20. Let's see what we get for a normal case scenario. Even in a normal case scenario, the stock is still 50% overpriced. The value is 250 billion. The current market cap is 500 billion. So that's a normal case scenario. By the way, guys, I'm going to be sharing all my links to these calculations in the description below for you to check them over and see if you calculate different amounts for your intrinsic value. Lastly, let's do the bull case. For the bull case, I'm going to say that Tesla just continue to be a growth generating machine, which they have done in the past. Look how much they've grown their revenues by in the past. Very high amounts. So let's say robo-taxis do well, Tesla just dominate the EV market, and they grow by 25% each year, and they sell for a terminal multiple of 25. You could even do 30 if you wanted as well, if you want to be very bullish. But even 25, that gives us an intrinsic value of 640 billion, 26% above the current price. So in this case, our value is above the price we pay, which would mean a buy. Nevertheless, those are my three calculations, my three cases. Now, a lot of this depends on the EV market as a whole, how Tesla does, how Elon Musk does with managing Tesla, and he manages his time between Tesla and Twitter, how the economy does. Will the economy constrict over the next 10 years and people have less money to buy luxurious items like Teslas? There's a lot of questions at play, which is why I like to do a bear case, a normal case, and a bull case. Nevertheless, for me, for Tesla stock, there's too many ifs, buts, and maybes, and there's not enough security in the stock for me to go ahead and buy the stock. However, I gotta say, I would never short Tesla stock. I would never short Elon Musk because Tesla just have too many bows in the quiver. Let's say all goes wrong. You know, they struggle with selling EVs. Okay, no worries. We use self-driving, we create a robo-taxi fleet, and we wipe out Uber, Lyft, and the taxi industry, and we just grow a massive market in that field there. You know, that's a bow they have in their quiver. Another bow is, okay, all goes wrong, no worries. We'll disrupt the whole energy sector through clean solar energy and our impressive battery technology. Another bow in the quiver. Yeah, Elon Musk, I would never short him. I would never short an innovative, amazing company like Tesla. But right now, I'm not going to buy it at the current price, $500 billion to buy that company. No. It would have to be a whole lot cheaper for me to become a Tesla stock owner. And I've gone over the reasons why. Hope you enjoyed the video. If you do want, you can go check out that website that I use to calculate intrinsic value. BuffettInvestors.com is nice, it's easy to use, it's simple, it's the way Warren Buffett does it. Warren Buffett, he calculates what are the cash flows going to be for the stock that I buy. A stock can be considered a money printing machine. How much money is the stock going to give me when I buy it? And what price would I be willing to pay for this? Check out the website. Tesla stock, is it a buy? Is it not? Let me know.